Hey guys, welcome to the channel. Today, I'm going to walk you through how to sell options. Specifically, how to sell cash secured puts. If you need a quick refresher on what those are, you can check out the link I left in the description below for my intro to selling options video. Otherwise, let's get into it. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Alright, here's my Robinhood Dividend portfolio. I recently moved some cash into this portfolio so that I could start selling cash secured puts and make some passive income off of it. You can see here I already have 2 active contracts for AMC, so let's walk through how you can do this too. First, let's go to the stock we want to sell contracts for. I'm going to go ahead and search for AMC. If you have options trading enabled, you will see this button here that says Trade AMC Options. We're going to go ahead and click it, and it brings you to this options screen. We want to make sure we have Sell selected. We do not want to buy contracts. We only want to sell them because that's how you get paid that sweet premium. Alright, we're going to start with puts. Now options is kind of backwards. When we sell puts, we are selling a contract that says we want to buy 100 shares of a stock for a certain price. Let me break it down. When we sell a put, we are selling someone a contract that says I want to purchase 100 shares of this stock for this price. And someone who is buying puts will be buying this contract, which is them buying the right to sell us those 100 shares for the agreed upon price. In order to buy the contract we are selling, they're paying us what is called the premium. If the contract gets executed, Robinhood will take the cash we put in as collateral and purchase 100 shares of the stock for the agreed upon strike price. If that was confusing, don't worry, you can rewind the video and listen to the explanation again. But let me show you what this looks like on Robinhood. So we have it set to sell puts. We can see the expiration date of the contract here, the current share price, the strike price, and then the cost of the contract per share. So let's say we wanted to buy this contract here that has a strike price of $35, which is the price per share we are saying we want to buy it at. And the cost per share of the contract is $1.56. Since there are 100 shares per contract, the total premium we will earn for selling this contract is $156. Let's try it out. I'm going to select this plus button here for the $35 contract. You can enter how many contracts you want to buy. Each contract is worth 100 shares. You can set the limit price, which is the price you want to sell the contract for. The 2 numbers just show you how much this contract is going for at the moment. If you want this contract sold immediately, you will enter the lower number shown here as the limit price. We're going to set the expiration as good for day, which means this order will stay active until someone buys it or until the end of the day. And we can see our minimum credit is $156. That's the premium we will get immediately for selling this contract. At the bottom here, it shows you the max profit you can make is $156, which is the premium you're getting. And the max loss here is a little misleading. The max loss is the total amount of money that will be used to purchase the 100 shares of AMC at the $35 strike price, minus the $156 premium, because you get to keep that no matter what. And the break even is saying that if the price of AMC drops below $35, because we made the $156 premium, we will not be at a net loss unless the stock price is below $33.44 per share. Remember, if the contract gets executed, we have to buy the stock for the agreed upon price, even if AMC dropped to $1 per share. We would still have to buy it for $35 per share. Alright, let's say you're ready to sell this contract. You would just review the order and send it off. I already have 2 AMC puts active at the moment, and that's tying up about $6,000 right now. So I would not have the available funds to use as collateral. You need to have enough cash available to purchase 100 shares of the stock at the strike price to sell these contracts. Another thing to note, for most of us selling these cash secured puts, we just want to collect the premiums and not actually buy the 100 shares. So you can see here where it says chance of profit. The further down you go, the higher chance of profit because there's less chance that the stock price will drop below the strike price. It does mean less risk, but less risk also means less reward, and the premiums are much lower. So choose a price that you're comfortable with that earns what you think is enough profit for you. Alright, let me show you what an open contract looks like. I sold this contract for a premium of $105, which was deposited to my account immediately. This contract expires on 8/27 and it's currently worth $71. With these options contracts, they slowly go to zero the closer to expiration they get. Because as we get closer to expiration, it will get clearer whether stock price will be low enough for the contract to execute for the buyer to be in profit. If the buyer won't be in profit, then the contract is worthless. And that's why we say it expires worthless on the expiration date. We got all the premium, and the buyer paid the premium but got nothing out of it. That is why we only ever sell the covered calls or cash secured puts. We never buy. The sellers get paid regardless while the buyers pay every time they buy a contract. If this is a casino, then we are the dealers. Buyers are the players. Something that you need to know. If things are not looking good and you may end up buying 100 shares of a stock at a loss, you can actually buy yourself out of the contract. You would do something called buy to close. With this option as an example, in order to buy to close this contract, I would have to pay $71 because that's the current value of this contract. So in the beginning, I got paid a $105 premium and I'm paying $71 to close it. So my net profit will be $34. 105 minus 71. And there you have it. You now have the basic knowledge to sell cash secured puts on Robinhood. You can research different stocks you wouldn't mind owning. And if you have some cash sitting around, you can do this to create weekly passive income. I plan on starting a new series documenting my options trading journey, so keep an eye out for that. And if you have any questions or if something was not clear, please leave me a comment below and I'll be sure to reply. As always, if you found this video helpful, make sure to hit that like and subscribe button. It really helps out the channel, and I'll see you guys on the next one.